Hey guys, have you wondered what's going on with the Huntsville real estate market? Well, I'm about to tell you. Hi guys, my name is Brandon Taylor with Capstone Realty. I'm a recovering engineer turned real estate agent, and one of the long-term consequences is a love for data and numbers. And so each month I dive into those numbers and try to tell you what's going on with the market. So this month is no exception. We're looking back at November to see what happened and maybe give some predictions on what might be happening coming up. So at the end, I'm going to give some tips for buyers, sellers, and investors, so stick around to find those out. So I detail everything on my blog on brandontaylorrealestate.com, so check that out if you want to look at the numbers yourself. But our bottom line up front is that we are still in a very strong seller's market. It's constrained almost entirely by the supply. There's ample demand out there, just not enough supply. And so we get to see how that goes up and down based on how many new listings we got. So we're going to dive into the supply and demand, talk a little bit about lending rates, and give some tips at the end, so stick around. All right, so we're going to dive into the blog here. We're just going to screen share and see what we see. All right, so as I said, we're looking at November's numbers and giving some pointers. So first thing we want to look at is the supply of homes. It's the easiest one to track and count because it's easy to see how many homes are available and how many new ones came up. So as you can see, there is a long trend from January of 17 till today. There's been a steady downward trend with a couple of hills and valleys, but mostly just along the trend line. And we are at the lowest point as far as number of listings on the market that we've been in the past 3 years. And if you look back at historic data, the Alabama Center for Real Estate at the University of Alabama has some, and it goes back even further, about 20 years, and we are still at the lowest number of listings. So we have a very tight supply. Kind of next thing we look at is how many new listings showed up this past month to give us an idea of what that's looking like. And so you can see that there's definitely a seasonality to new listings, that it rises kind of through the spring, stays high during the summer, drops during the winter. And this year is no different. We're still seeing a drop down to 671 new listings in November, which is consistent. That's 12.9% decrease from last month, but it's an increase over last year where we saw 585 new listings. So that's consistent with this real estate market as a whole, that we are increasing over last year, but still having the same seasonal changes. And so yeah. So if we say most years December is generally the lowest number of listings per year, and if we look at this year's numbers compared to last year's, we're looking at around 550 new listings this month. That's a guess, obviously, and so we'll kind of track and see if it sticks to that, or if like everything else in 2020, if this one's a little bit different. All right, so then we're looking at the daily new listings. This is a chart I pulled together. It just pulls data off the Valley MLS and gives us a little bit of an idea of what's going on. So you can see that through September and October and the first part of November, we stayed right in that between 30 down to about 24 or 25 listings per day. It's been a pretty tight window, but then as we went through November, we started to see it drop off, and then it dramatically dropped off after the 20th, kind of, where we saw that spike on the 20th, and then the rest of the week of Thanksgiving, there was a significant decrease, and it got our 28-day moving average out of the 20s into the upper teens, and then our 7-day moved down into the single digits. And so there was not many listings through the week of Thanksgiving, which you'd expect. I'm not sure how many sellers are really thinking, hey, you know what I want to do Thanksgiving week? Let's list our house, see who will buy it. So it makes sense, but we did see that slow down as would be expected. For December, looking at that daily, I think we'll get back up into those 20s for our moving average. We'd expect to probably be in that mid-20s range pretty quickly for the beginning half of the month. But I do think probably the week of Christmas and New Year's, I think, will be significantly less than the kind of the first 3 weeks of the month. That last 10 days or so of the month should slow down. All right, next we are moving on to look at demand. Demand's a little bit harder to measure. It's hard to know how much demand there would be if we had more supply. And so we have to look backwards. So most of our metrics are looking back 45 or 60 days. We'll talk about that a little bit. So first thing we look at is closed sales. Of course, this is measuring the market about 30 to 60 days ago when these things went under contract, but it's still useful. We saw 657 closings in the month of November. This is a 14% increase from last year, but a 15% decrease from last month, which we would expect, as October, when most of these things went under contract, is not as busy as September. So we're seeing the seasonal slowdown, but overall increase in volume. Next, we're looking at pending sales. This is another metric. It's a little closer to today than the number of closings, because this happened really in the last 30 days instead of 60 days ago or whatever. But the downside of pendings is that some percentage, about 1 in 6, 1 in 7, depending on who you believe, fall through, and so we expect all these won't close. But we do see that there were 676 pendings, which is a decrease from last month, but a 19.4% increase from last year. If this continues, we'll see about 580 pendings next month. That challenged me a little bit because that means we'd have more pendings than we would new listings if both those trends hold up. So one has to give, and I think probably we'll see the pendings closer to that 550 number that we expect to see for new listings, but we'll have to find out. All right, looking at pendings over the past few months, we see kind of the same trend where it's the green 28-day moving average. It does stay pretty steady throughout the period, tailing off a little bit as we get to the beginning of November. But there was a more significant drop-off, a less significant drop-off, I'm sorry. There's a less significant drop-off in pendings than there were in new listings. But we do still see a drop-off that last week in November, down into the upper teens. And so I expect that to recover back up into the 20s per day, maybe mid-20s for the first 20 days of the month or so. All right, next we're looking at the mortgage rates. This is from the Freddie Mac Primary Mortgage Survey. It is done every week for the last 30-something years, and we get to look at these trends. We're still among the all-time lows for mortgage rates, with both the 15 and 30-year fixed-rate mortgages in the upper two, or in the twos, really 15-year in the lower twos, which is crazy low for how cheap the money is. You can see that this is an all-time low if we look at this view from the 1970s. Everything's down here, and it's even, if you look 3 years, it's been significantly down in the 3 and 5 year periods. What this means for us is that demand is going to continue to increase because people's buying power is higher than it's been at any other point in history. And so for the same payment, you can get a much more expensive house. All right, so next we also look at the median days on market to talk about demand, how quickly people are buying. And we have been pegged down at 3 days on the market for the median since June, which is very quick. That means that half the homes sell in basically a weekend. So nothing's changed, and we've been in a strong seller's market. And so I think demand is still very good. Finally, we look at a ratio called the supply of homes in months. So it's basically how long would it take us to sell out of our inventory at the current rate. And countywide, we are at 1 month of supply. So this metric is used for like 5 or 6 months. Is considered kind of a neutral market. More than that is basically a buyer's market. And so we're very strong in the seller's range and have been for some time. All right, next up is what I call the delta chart. It's just a chart. I put the daily listings minus the daily pendings, and it gives us a plus or minus on if we gained houses that day or lost. And you can see that the 28-day moving average here has stayed in the positive for the entire duration of the chart until the very end of November, when we finally dropped into the negative for the 28-day moving average. And that means over that 28-day period, we actually lost houses on the average day. And you see that it definitely changed in late November, with the last 10 days or so all being in the more going pending than listing range. So I expect after the holidays that if we extend this out, we will see a spike in new listings probably the week after Thanksgiving, and then for the first 3 weeks or so of December, I think that we'll do the same. But then the last 10 days or so of December, I expect the same kind of trend where it'll be down low, and the only thing going pending will be the things that are already on the market. All of this leads us to the median sales price. As you would expect, when demand is high and supply is low, we see a trend up and to the right for prices as time marches on. It is interesting that we've actually pegged out right at $250,000 for the last several months. I think there's probably some psychological kind of situation going on where a lot of people stick to that 250 number, so you end up with a pretty large volume of sales at it. So I do expect that to break as it continues to go up, just because the low supply pressure has to be pushing prices up. Econ 101 tells us that, right? So finally, here is the money slide, the tips for buyers, sellers, and investors. For buyers, I think this is a time to be both patient and aggressive. Patient in that you gotta wait for the right house to come. You have to bide your time, so to speak. And aggressive means the terms you offer, the price you offer, needs to be aggressive. You don't need to, I've heard someone say that if you sleep on it, you don't sleep in it. You need to be ready to make those offers, which the last tip for buyers is to save some cash. Money talks in this market. The more money you're putting down, the less you ask for in closing costs, those sorts of things, the better deals go, the better your offer will look. So while you're being patient waiting for that house, stacking up cash is a good idea. Sellers, there has never been a better time to list a house. There are lots of buyers out there. They're gobbling up the inventory as it shows up. And this is a great time to get top dollar for your house. So yeah, there's nothing more to say about that. Investors, there's some interesting things going on in the investor world. There's a lot of outside money coming into Huntsville, so you'll find that it's getting harder to find good investable properties with a lot of out-of-town investors coming in. But they're still out there. Normally they do require some work. That's something that the out-of-town folks have a little bit more problems doing. They want to buy something more turnkey. And so if you're willing to do a little bit of a remodel for a rental house or do a fix and flip, these are good markets for those kind of investments and probably where you should be focusing your energy. All right, so that is my update for the November market here in December. Let me know if you have any questions or comments, and if there's anything I can do to help. Check out, if you want to look at listings, check out BrandonTaylorRealEstate.com and give me a call. Thanks, guys.